What is a dividend and how to make best use of it? That's our topic for discussion today in the Market Secrets Investment Series. Before we head into the session, I have a notification for you. In addition to the investment series, we are running multiple other learning series in parallel on price action trading, algo trading, and trading strategies. Also, we are providing multiple real-time data feeds for our users. So if you are interested in any of it, check out our website www.marketsecrets.in. And with that note, let's jump into today's session on dividends. So what is a dividend? Everyone deserves reward for hard work. After a long day's work, there is no better reward than a nice steaming cup of tea or coffee. Likewise, companies also give out rewards to those who show trust and invest in their company. This reward is called dividend. So today, let's discuss dividends. What is a dividend? Dividends are a very debated topic among investors of all kinds. So let's just understand what exactly these are. When you buy a stock of a company, you become part owner of the company. You are a part of prosperous future the company wishes to build for itself. Hence, you are entitled to whatever profits it decides to distribute as a reward for believing in its business and investing in it. This reward is termed as a dividend. When a business reports a profit after putting aside all its big and small expenses and future investment plans, it gives back some amount to its shareholders. This is called a dividend. So in simple terms, a dividend is a distribution of company's profit to its shareholders. Although cash dividends are most common, dividends can also be issued as shares of the stock or other property. Now, are dividends compulsory? Of course not. Stocks don't owe us anything. We are not lending our money to the company when we buy its stock. So, unlike a bond or giving a loan to someone, a company does not always have to give out dividends. Some of the biggest companies in the world, such as Amazon, Tesla, or Google, haven't paid a single dividend till date. They say they have planned to use this money as a reinvestment in the business to grow their company. So, are dividends always good for investors? That depends on your approach as an investor. If you are an investor interested in fast growth and not fixed income, you might prefer a stock that doesn't pay attractive dividends but grows the company faster. From a company perspective, if a company grows fast enough and has a good expansion potential, it can choose to give a smaller dividend or nothing at all. But sometimes companies are cash rich and have met their expansion needs. In such cases, giving a dividend is affordable and sustainable. But what happens if a company announces a huge dividend? Do you know that at times companies pay really big dividends when they shut down? Majesco is an example of that in the Indian market. Since the owners were selling off the US division of the company, they declared a dividend of 974 rupees when its share price was only 900 to 950 rupees. And if you know anything about dividends, you would know that the average dividend yield in India is just 1.5 percentage. This is really low when compared to the global markets. So what's the impact of dividends on a share price? Since the dividends are irreversible, their payment typically leads to money going out of the company's book and accounts of the business forever. Therefore, dividend payments impact share price, which will decline by the dividend amount at the end of the opening session of the ex-dividend date. Let's take a simple example. Consider a company is trading at 600 rupees per share and it declares a 20 rupees dividend per share on the announcement date. Now consider the stock is trading at 605 rupees per share on one business day prior to the ex-dividend date. On the ex-dividend date, it will get adjusted by 20 rupees automatically and will start trading at 585 rupees at the start of the trading session on the ex-dividend date, as the dividend amount is going out of the company and it reduces the company's value. So if 10 rupees dividend was announced for a stock, the price of the stock will come down by 10 rupees on the ex-dividend date. As simple as that. So when it comes to the dividends, there are a few important dates that you need to remember. Dividend payments follow a chronological order of events, and the associated dates are important to determine the shareholders who qualify for receiving the dividend payment. Number 1. Announcement date. Dividends are announced by the company management on the announcement date or the declaration date and must be approved by shareholders before they can be paid. Number two, ex-dividend date. This is the critical one. The date on which dividend eligibility expires is called the ex-dividend date or simply the X date. For instance, if a stock has an X date on Monday, May 5, then the shareholders who buy the stock on or after that day will not qualify to get the dividend as they are buying it on or after the dividend expiry date. Shareholders who own the stock one business day prior to the ex-dividend date, that is the previous day, which is on Friday, May 2 or earlier, will receive the dividend. And number three, record date. The record date is the cutoff date established by the company in order to determine which shareholders are eligible to receive the dividend or distribution. And lastly, payment date. The company issues payment of the dividend on the payment date, which is when the money gets credited to the investor's account. So these are the important dates when it comes to the dividends. And lastly, the dividends paid by mutual funds are different from the dividends paid by the companies. Company dividends are usually paid from the profits that are generated from the company's business operations. But when it comes to mutual funds, it isn't the case. So don't confuse between these two. So this brings us to the end of today's episode. So do you understand what is a dividend? Are you a dividend focused investor? What is your dividend yield? And what's your experience so far with the dividends? Let us know in the comment section. Also, if you have any queries, comments, or feedback about this episode, please leave it down in the comment section. We'll be happy to answer it. Also, hit the like button if you have liked this video and share it with your friends if you find it useful. Also, subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.